Hey guys, it's TWETV here and bringing you guys another YouTube video. I know it's been a minute that I haven't really posted, but this trade was something that, was actually what we went over in our recent boot camp, and it just was a perfect setup and really caught my eye on how it worked out and how it played out. And basically, it's all based off of structure, and we're using structure, liquidity, supply and demand to kind of determine our different entries. And in this particular case, doesn't necessarily mean that it's, going to go up to the upside and break that higher high and, continue on. But at least at this given moment in time, there was so many different trading opportunities, and I wanted to bring value to our students and kind of show them, like, for example, here we're tapping into a 4 hour, and just in every single one of these 4 hour zones that you see on my screen, there was opportunity. And it's not even that, there was continuous order flow from the supply side, and it just gave us more and more and more opportunities as the market played out. For example, here, I already have a couple setups already marked out. Those are previous trades that we already took. But in this case, I'm marking out a 15-minute zone. Mainly why I marked out that zone was because there was a very aggressive wick, and, you have multiple candlesticks and multiple different wicks here. So I like to get at least in this case, I'm trying to get the farthest POI. I don't want a POI that was already mitigated or tagged. So I'm going for the one at the very bottom there. And with that also being said, that's a perfect POI if you really think about it, just because since it had a very aggressive wick, 9 times out of 10, that means it's sweeping liquidity, then had a movement to upside. So as it's playing out, all right, it taps into it. Beautiful. Let's hop into a lower time frame and just take a look. But oh wow, that was heavy news that day. There was a lot of movement. Look at the wick on the upside. That kind of speaks for itself. So as we go ahead and tap into the lower time frame to just get a little better look and kind of gauge what kind of setup we want to, find ourselves in. So how I'm viewing it is, we tapped into that 15-minute, beautiful. My main objective is trying to determine where and who is in control, right? We're trying to establish that. And not only that, there's a fair value gap, right, that I really wanted to highlight because, if you can get the fair value gap, imbalance, whatever you want to call it, don't get lost on terminology, guys. If you get that to line up with your supply and demand, that's just adding more confluence to your whole trade idea. So what I want to do is just mark out the market structure, right, as it's tapping into this 15-minute demand, because that's ultimately what's going on. We want to pay attention to every single point. So in this case, we have structure that was clearly breaking structure to the downside. All right, I'm going to just mark it out just so it's clear as day for everybody. Let me just, hold on a second. Yeah, so it broke structure to the downside. It's really close. It really is, but it definitely did. It didn't break that 15-minute demand. That demand is holding. It breaks structure to the upside. So a lot of people would definitely consider this multiple trucks, or a change of character, or a market sweep, or some people even call it a market shift. Different terminologies, but I just like to put it all out there just so if someone hears something different, so we have these little transactions, which is also known as a flip or a supply demand exchange. Just so, like I said, there's so many different terminologies, but I like to list them out just in case if any of you guys are paying attention and hear something different from somebody else, you don't start running thinking, oh, there's another strategy for me to learn, when it's just the same thing. So here we have clear points that tell us what? That the supplies are valid, right? Based off of the market structure, the supplies are there, right? Now, what is it doing? It's showing reaction to these supplies. And in this case, we have a little demand. I'm just going to mark it out just because a lot of people probably take that trade. You know, I know a lot of students that'll probably take it. And in my case in particular, I mean, it would just depend on where I'm at in the month. And just because I also see this other demand that I'm looking for, right? I may not take that first demand, you know, or if I do, I'll take it if, let's say, my month already hit my percentage goal. If I'm aiming for 10%, let's say, of, that's just my goal for the month. Then, I mean, yeah, if I already achieved that, then yeah, I would most likely take that trade. And if I did it, let's say I did want to, just take a trade, which, that kind of sounds terrible, but, you do have some opportunities that you do see. And in this case, this is a valid opportunity for us. Liquidity was swept, tap into a 15-minute POI. You found a transaction. There's nothing wrong with that. So in my case, I'm aiming for the higher time frame here. And I mean, we got two different setups here. And in that first one, like I said, if I was taking it and I didn't hit my goal for the month, I would just take it with a grain of salt in terms of take it with low risk. If, let's say, your rules would be, let's say, take a trade 1% per trade, then I would probably do 0.5%. So in this case, we're going to let the liquidity form. And that's the beauty of it. The market's always going to create liquidity and sweep liquidity. It's always generating. Literally what we preach, the liquidity phase, the market goes through that all the time. It's just creating it. And if you see that it gets swept, 9 times out of 10, it's in the midst of making another one. So in this case, we have a lot of liquidity just building up, right? And how I view it is it's got to have that liquidity on the downside there to fuel, right? It needs fuel to pull the market, so the market can pull into these fair value gaps, or at least the supply and demands. And in this case, it would be a demand lined up with a fair value gap. And how I also like to view it is the fair value gap is 9 times out of 10, you could consider it like a magnet in the market if you identify it correctly. I'm trying to be very conservative on that because a lot of the time, a lot of fair value gaps are marked incorrectly. But with that being said, that is my high probability trades I'm looking for. That's the optimal trade that I'm looking for. With that wick on the upside, that is liquidity to target. And the liquidity I marked out on the upside here, that's liquidity to target in a nutshell. And if you see that, it doesn't sweep it. There's a reason for that. Now, another big thing is when a lot of people see liquidity constantly being generated and they're not seeing any sweeps, I noticed that a lot of, at least from, personal experience, I mean, I don't really get too worried anymore, but I know a lot of students do see something like this and immediately get worried because, for example, like this, it jumped to the downside, swept all that previous liquidity that we were just looking at on the downside, tapped into our zones, and then you see an aggressive push to the upside because it immediately wants to sweep that liquidity on that upside. A lot of people do get worried, thinking that the wick is going to be a lot larger than they would have, estimated it to be. And there was, a lot of people are usually scared to get in that trade. And I noticed a lot of people used to, well, at least people still do it. They'll expand their stop loss, just to kind of overcome that. Personally, how I view it is if it doesn't respect your zones, why would you want to be in that trade? That's how I personally view it. I would rather, just take a loss and at least I know if it still goes in my direction, okay, well, got to take a look at it and see, maybe I marked out the zone incorrectly. Maybe there's a fair value gap. If, let's say, the fair value gap is under this demand, then that would have told me right there that, okay, I marked this wrong and I took an entry in the wrong spot. So in this case, we had two different trades, and that is, I mean, some people, that would be considered a swing trade to a certain degree, but, that's just two different opportunities that we could have taken, an entry. And this is just a perfect example of order flow because that's ultimately what's happening, right? We found different demands the original demand, right? The floor. And yeah, guys, if there's any other guidance that you guys need, you're more than welcome to reach out to us in our Discord. All my links are in my bio. We are now going to be starting our new and improved Elite Bootcamp 2.0. It's going to be coming out in July. Very few spots. If you need more information on that, my links are in my bio. Stay profitable.